Greetings, Dr. Jeffrey Scott here, and this is my weekend market update for September 6, 2025. I am here in lovely Barcelona, Spain, and about to go out to the meeting that I'm presenting two papers at the World Lung Cancer meeting. Thought I'd get this out before I go. I entitle this Weak Employment Data Drives Bonds Higher. That means lower rates. But will high inflation data this week ruin the impending rate cut party? Again, it's September 6, 2025, and this is part one, my market review. My email address is marketmripro@gmail.com, and I have a Google group called Top Down Trader. This was a funny week for my portfolio. Not funny, it was a great week for my portfolio. We'll see that the markets were okay. They didn't do much. They certainly haven't followed through with the doom and gloom scenario. But I've always said I'm still mostly long. If anything, this was a week that proved it matters where you are in the market. To be long the wrong groups and industry groups and the sectors and stocks doesn't help. But to have stocks in those industry groups that are leading, such as biotech this week and gold, can really help your portfolio. Hence why I look at the market from a top down perspective. All right. Oh, I got to turn that off. As always, it's for educational purposes only. Anything I recommend should be taken in the spirit of education, not investment advice. 10 to the videos that demonstrate the tools of top-down analysis. Trading involves risk. You'll own are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisors before making trades. And I have tools in multiple platforms, but I'm an independent trader. One other thing I should point out, I do these videos every weekend, most nights during the week, and I do have a frog in my throat. I don't do have a script. I don't edit these. I just go through and look at the markets the same way I look at it for myself. So if you hear me coughing or things like that, it's just because I just do these. I want to do them quickly but accurately, but I care less about how pretty they are from a cleaned up perspective versus the content. If you're looking for my Stocks and Docs video, look Monday morning at stocksanddocs.com where I'll do my full wealth charts evaluation. I do have seats left at my Palm Beach Gardens live meeting. Um, if you listen to me, if you start to think the way that I think, you should be making money in this market. I showed you how it was up 100% in the first 6 months. After this week, I'm probably, I don't want to give you results, but let's just say I've probably lapped myself. Um, I've been trading for 30 years and I love giving back because of some great people that helped me get to where I'm at. It's these videos and more importantly, the live mentoring at these meetings, such as the 26th and 27th, where I do that best. It's at the Marriott Palm Beach Gardens, 2 packed days of education and software. I do this intentionally on that weekend because my good friend John Person, who's just an amazingly great trader, educator, author, software developer, and money manager, holds his seminar the 2 days before. So his is Friday and Saturday, mine is Sunday and Monday. Separate meetings, separate tuitions, one airfare. Cost for mine is $12.50. I'll feed you more than you can eat. There'll be snacks, fluids all day long, and a dinner cruise on my yacht, Stocks and Docks, Sunday Eve. Hotels, the Marriott full service, $155 a night. If you're interested, just let me know. I'll send you a payment link and give you the information for the hotel. If you attend this, you'll get $400 off purchase of any of my tools. If you pay the $12.50 for either live or online, and you don't have my tools, then you can use that 400 on the Market MRI Pro. If you already have Market MRI Pro, you can use that 400 towards a number of other things, including my trade station tools, my that's the Metastock tools I can give some consideration or even next year's meeting. My Google group's called Top Down Trader. You sign into Google Groups, click all groups, find the one you want to join, which is Top Down Trader. Let me know how you want to contact and how frequently. I always like to look at this to see if there's anything that should worry me. When you have an inversion and you cross back above the zero line on the yield curve, this is a 10 minus 3 months. This is a 10 minus 2 years. That's when inflations occur after you cross above. But the timing of such inflations, nobody knows. So, of course, not inflations, recessions, my bad. No one knows when that recession is coming, but we'll get a recession someday. I'm going to look for things like a spike in the high yield index options adjusted spread. We don't have one. I'm going to look for a spike down where minus zero point 0.3. Need to get to minus 20 before you start to worry about a recession. We're not there. So is there one in our near future? I don't think so. Is there one in 26? Would not surprise me. Know your earnings and EPS. This is a big week for inflation. PPI on Wednesday, CPI on Thursday, and then the preliminary consumer sentiment, which can really rock the market if it comes in below expectations on Friday. So this is another big week of news. Earnings are slowing down as we start to lap this quarter and start to get ready for the next quarter. It is a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. For more information about the software, the meeting, or just want to reach out to me and talk about the weather, just reach out to me at marketmripro@gmail.com. And if you have any issues with the software, Praveen, my partner in this endeavor and a great coder, is at coding at marketmripro.com. And consider joining the Top Down Trader group. It's free. I'll give you extra discounts and insight that I don't give anywhere else. Onto the charts. Now, just to point out, this is not the hotel we're having the meeting at, but it's about 5 to 7 minutes away, like one turn. If you want your spouse to love you, bring her or him. I won't be sexist. And let them be at this beach for the weekend, and they'll have a great time. I used to live 2 doors down, and it's a great beach, Singer Island, Florida. All right, let's take a look and see what I'm seeing in the markets. Start with um, the daily breath tool. You could see on the day Bitcoin rallied up 1.72%. It was flat to down a bit on the week. The Russell was up 0.5 and was the big winner again on the week as we continue our rotation. Volatility was up 0.25 on the week. It was relatively flat. The Qs were the other index up on Friday, but all these, the Qs, the spiders, and diamonds, which were down a bit on Friday, all three were flat to down a bit on the week. And the dollar dropped 0.51, although on the week it was relatively flat. New highs and new lows have significantly increased, triple digits and almost triple digits when you look at the new highs minus new lows on the NYSE and the NASDAQ. One thing that I didn't like is that despite the fact um, it seemed like a strong day when you watch CNBC and you see Broadcom and a few other things. It wasn't a broad day. 56% of the S&P 1500 were up, 52% of the NASDAQ were up, and 57% of the NYSE. So positive looking market, indices not so hot. The big guys were doing fine, and it was the breadth, the smaller stocks that perhaps, or the less active stocks that lagged. If we look at what led on the day, it was real estate was up 1%, materials 0.7, communications 0.53, and healthcare. What lagged? Energy, financials, industrial utilities. So kind of a mixture. Hard to say that it was defensive or not defensive leading. If I look at the week, however, up top are communications, healthcare, staples. But again, staples and discretionary up at the top on the 5-day change, but lagged energy, industrial, finance, technology. So probably a little bit of rotation and continues out of tech. If we look at what on the 1-day change, what sectors or themes were leading, got a bunch of them listed below: lithium, solar, clean tech, cannabis, miners, gold miners, genomics, biotech, social. These were all up over 2%. Home construction, biotech, silver, renewable energy, copper, China discretionary, NASDAQ, cybersecurity, all up at least 1.6. So when you look at the 1 day moves, they're massive. But to my point, when I kicked it off, you had to be in the right industry groups or themes to benefit. All right, let's take a look at my timing model. The daily model continues to show a sell signal on the spiders and the Qs. And it's kind of interesting because you have a sell model on an industry group or an index, spiders, that set an all-time high on Friday before selling off. It's interesting. I thought for sure we would have flipped to a buy. We're right below all-time highs on the Qs, but still showing a sell. So I guess I could interpret that as just because the index is doing well, it doesn't mean all is perfect, but we might also be on the verge of flipping to a buy. So I'm going to be open-minded. On the Russell, recent highs, new set, but they're not all-time highs, and the doji bar could be indecision at all-time highs. And we had a reversal on really everything from the open. The solid candles mean it opened higher than it closed, but buy signal still on the daily diamonds and Russell. So short term, a little bit negative, but less negative than a week before. And if I look at the intermediate term on the weekly charts, um, it takes a little bit longer here because we never opened up servers in the EU. They're still in the States. So it's going to take a little bit longer to load. Here you could see the weekly charts were in a buy signal for each of the major indexes. So weeklies are still long. The dailies, although they had two that were negative, are improving, and the monthlies will also be long. So the dominant trend is higher. Um, I still am concerned that short term we might see a little bit of sideways. I don't see signs that says we're going down hard, and that's despite the Hindenburg. But if you knew the Hindenburg data, you would know that only 1 out of 4 are significant. I look at the U.S. indexes, and I'm going to go a little quicker than, well, actually, I want to show you this. Still, here is the spiders, and notice the white line here represents all-time high, so we have to push it up. But we had a reversal here at an all-time high and a closed mid-bar in the prior day. That's a bearish-looking candle to me. That's a daily chart, and that was down only 0.29, but it's the reversal off the all-time highs. It's also what we would call a red candle high because there's nothing higher to the left forever, let alone 10 bars. And we closed below the open, giving us a red candle. You can see that dot underneath here. That is often the sign of a reversal. Not always, but it's certainly one that can be the sign of a reversal. Again, seasonality about to roll over, at least for the month of October. Excuse me, September and maybe early October. So not a bad week, all-time highs, a little bit concerning of how we ended. If we look at the Qs, you're going to see, I think, a very similar story. Just off all-time highs, seasonality not so hot. Now, Qs closed up a bit, but still reversed from a much higher move. And are we double topping here? If we look at the diamonds, let's see, I believe, safe to say, that we had another all-time high. And what happened with that all-time high? Well, just like the others, we reversed and we were down 0.45. I don't like reversals. And again, another red candle high is denoted here. What about the Russell? Russell is probably different than the others, but it's still reversed. That's the one that gave us the doji up the most, up 0.50. But here's all-time high up here. So it's getting close. In fact, if you had told me in April that we would get close to an all-time high on the Russell before the end of the year, I would have thought that was highly unlikely. But look at this move. Wow. If the markets are strong, you'd expect the volatility to be light, and volatility continues to sell off. Now, it spiked on Tuesday, but a very bearish candle. And it's traded down, and it's now down to 0.78. And you can see on the week that big red candle down 11%. So volatility week. Now, when we did this last weekend, I had some concerns that perhaps the dollar was going to break out to higher highs, and it failed again at this line. I think this is an important line, and as long as we're below, the dollar is our friend. That is, if you're long US equities or playing commodities. I've been hyping on gold. Gold is at all-time high territory, and I still think gold looks very good here. I am, to be transparent, quite long gold, and I've got both miners and GLD, and certainly it was something that helped my portfolio this week. 1, 2, 3, 4, from 320 to 331, almost a 4% move in a single day, a single week. And if you have options, it's even amplified. Silver up at many year highs, decade highs, not higher than the 2011 highs. But silver had a strong day up 0.76, but that did not close near the high. Natural gas is down. Oil broke down below the 200. And the best news, if you're long equities, and we'll see if it continues, is 2.25 drop on the 10-year and a 2% drop on the 30. And we're getting further and further away from those double lines, which represent the 5% rate. So if you think about themes, certainly the theme of low interest rate is attractive to REITs, which is why they were high. They paid dividends. Surprised utilities weren't up there. Maybe they were. I have to go back and look. It's also great for home builders, and home builders are having a nice run. If I look at the buckets, I'll just say it shows no signal, so not overbought, not oversold. If I look at market breadth, look at the NYSE. If this candle is not in error, and I'm questioning whether it is or it isn't, but if it's not, then it's at an all-time high on the daily bar. I'll have to go back and check that. Volume was up a little bit more than normal, but not massively. Stocks above the 20, 50, and 200 are kind of holding off the higher levels before. And the down below, the new high, new lows, AD lines, and up down volume are positive, no other signals. If we look at the NASDAQ, it did hit all-time highs, but reversed lower. You could see, again, neutral on the stocks above, and we have positive and new high, new low AD line and up down volume. And I thought we had a bango here, but it must have got cleaned up overnight. So um, reversals at all-time highs. Will we go lower? I think everything depends on CPI and PPI. If we look at the more advanced market breadth, all right, so everybody has been asking about this. This is a simple chart that I created. I have the spiders, the NASDAQ, the S&P 1500, and the Russell. I have the new high, new lows of 13-week, above the various moving averages, the AD lines, and the RSI. That's it. It's an easy chart to create. Praveen's supposed to give it to everybody, just I don't think it's come out yet. So you could see S&P spiders, as we know, hit an all-time high this week. And you could see that we're up to 0.83 on the new high, new lows. That's not horrible. Mixed on the stocks above. The AD line is moving up, which is nicely. RSI line's moving down, which is interesting. Higher highs, weaker RSI. The NASDAQ composite, again, intra-weeks at all-time highs at 0.74, so not extended to the point we expect a pullback. Stocks above moving averages are middle. Still, although it's turned up the AD line, it's still a big divergence. When you look from here to here and from here to here, you got that divergence. Both these divergences are bearish. And then if we look at the Russell 2000, both it at 93% and the S&P 1500 at 92% are getting to the point where another strong day could get them into the we're probably going to have to pause or pull back a bit. We're getting stretched category, which if you've been following me for any length of time, it's uncanny how that 13-week new high, new low works. So let's summarize my thoughts on the markets. Surprisingly strong week for my portfolio because of the top-down approach. This is why I do it. Gold, solars, semiconductors, all things that I had. I think the market's still poised to go higher and will end the year higher. I still think September's hard to ignore the negative seasonality, so maybe we flatten out. Um, the biggest concern that I have is that inflation comes in hot, and then we have stagflation, which is never good for the market. So I am mixed on the market. I do think we end the year higher. I have mostly long, so I still have a few shorts in. And I've been very protective of the stocks going into earnings, whether it means selling them or buying puts to protect them, because I'm a little nervous of the market. If I look at the ratio charts, just to give me a sense short term, you could see the strength in communications. Google certainly helped that one quite a bit. You could see XLY discretionary has been strong. Technology, which had been a leader over the last couple of weeks, has sold off. Healthcare, which had been a major laggard, has come off the bottom, and utilities remain super weak. Industrials kind of weak. Financials pulling back. It's a narrow market when I look at the ratio charts. So then I go to the JAS layout, and let's just do a quick top-down analysis. You see that after a positive week, the number of stocks in my universe of NYSE, NASDAQ, and Amex above $1 and 100,000 popped up to 3724. Each one of these stocks has an industry group and a sector. So I showed you earlier some S&P 1500 work. I showed you the SP 500 sectors. Well, I'm going to show you the Jeffrey 3700 sectors, which means it's different. It's much bigger, it's much broader, so the numbers may appear differently. If I look at what sectors led, basic materials, technology, and healthcare, gold, tech, and biotech. There are 1,495 stocks in those top three. Because real estate was so hot, let's include that as the top four. And you really can see these are the ones that were up over 1%. Now, once I highlight something, what populates here are just the industries in those sectors. So let's do this by percent performance. And let's count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Those are the top 10 industry groups in the top four sectors. You want to know how you get to be in the right stocks? You're in the right industry groups and in the right sectors. All right, now I got 604. Let's drop some filters on it. We're going to drop the $5 and 500,000 share filter on it. And what do we got left? We've got 277. There are a couple of different ways that I would review this. I could, but I won't, go to this one and just go one at a time. It may take, like I said, I'm far away from a server, so, and just go down the list one at a time to see what I like. It's fine. And I certainly do something like that over the weekend, but I don't have an hour and a half here. I could rank them by short-term momentum. So it's not just one-day performance, and see what comes to the top. CRVS, healthcare breaking out, cheap pharma stock. Repligen, notice these are all healthcare stocks. Here's your first basic materials. I like Castellum SE. Sideways move, looks like it's breaking out. And if I look at fundamentals, it's going to have 37 cents versus 2 cents, so massive growth. Don't know what the revenue expectations, but it's growing. It's multiple of single digits. Wow, I like this one a lot. This might be one I'll be taking a look at. Uh, and I'll go down this list and see if there's anything I like. Another thing that I like to do is add pullback and uptrend and above the 200, because this has been a strong market. Why buy laggards? Brings it down to 66. Rank them by the number of up impulses, signals that something's happening to. Take a look. MT, ArcelorMittal Steel. Come on. So we can see, like the last stock, coming off the bottom, like the market, kind of a loosey-goosey thing. Make it look less loosey-goosey, breaking out after the 500, off the 50 rather. Good volume, gap, volume, breakup momentum out of a squeeze, good relative strength OBV. Okay, I just don't like it because it's kind of sideways and loose. Kodiak Sciences, which is the next one that'll show up. This one I've looked at for a couple of days. Nice pullback. Looks like it's ready to run again. Here's your uptrend. Here's your pullback. Here's your breakout. Good volume, a CPR, volume breakup momentum, good relative strength at OBV. I like that one. DMAC. Don't know this thing from Adam, but similar pattern. Uptrend, pullback, breakout. That's what I'm looking for. This is a REIT of government properties. It kind of looks kind of flat there. Um, I wonder, I'd want to make sure it's not being taken over. 8% yield. I've liked this one for a long time. Um, Seems to be a pretty safe investment that pays a huge dividend, almost 10%. And we're about to have 76%, 76 cents versus 3 cents. Revenue 8.5 versus 746. Look how steady. I make sure this thing's not a buyout, but boy, 10% dividend on a steady stock. BioNTech, a healthcare stock, one of the prior RNA vaccine companies, AVGO, which had just great earnings, sold off, but still closed up on the session. Zymeworks has been in a lot of my scans this week, a nice gentle uptrend, pullback, and a breakout here. And you can see relative strength really taking off in OBV. ZBio, another pattern of a base, uptrend, base, and a breakout, like that one a lot. So there are a lot of stocks here, but what I wanted to show you was how many of them were healthcare related. So that is top down at its best. I'll be back and do my other video later on today after my meetings, and I'll go deeper into some of the stocks and maybe pick 3 or 4 that I especially like on the week. Now, the other thing I like to do sometimes from a top down perspective, just to show you, and why are you not doing? Okay, now it is I won't click the sector, so I get all the industry groups and just look at what's the leading top 10 industry groups: coal, electronic gaming, so on and so forth. And solar was one that really has been strong despite the fact that tariffs and the issues of what's going away from the government. Solar has actually held up well. And First Solar is one that I've been playing. All right, and then you have the favorites, which is just to go into the impulse list and run special scans. And we released a bunch of new ones this week, so I will be going over them on my upcoming video. But what I really like, and we're just going to look at that right now and then say goodbye, is let's get the price and volume. They're already in there, so let's click that. Make sure you clear your filters if you can't find something. Here's my price and volume filter, and let's get my 2-day momentum filter and see if anything comes up. And let's just very quickly look at what showed up. CCRN, don't know cross-country healthcare. It's kind of going sideways. I probably would do research before I did anything. CDW is below the 200. CYRX looks great. Again, I'd have to do research. Nice uptrend, pullback, bottoming tail, and a breakout. And you could see it all. CPR, volume, breakout momentum. It's a 2 momentums in a row that triggers this coming out of a squeeze, and relative strength going up. CYRX looks really good. Lifestyle, ELS is a lifestyle real estate. I'd rather buy uptrends, but it's had a nice move. ERJ, they make planes. They announced some recent sales. EXP, a material stock breaking out above the 200. Relative strength and OBV look good. Is it too extended to buy? High jump's only 40, so the answer is no. FBIN have to break above the 200. FND, Floor and Decor, Home Depot was up. Perhaps the housing supporting market like Home Depot, Floor and Decor are about to make a run. You had gap, volume, breakup, momentum, good relative strength at OBV, closing above the 200. I might like that. Fulcrum Therapeutics, uptrend, sideways, breakout. That's a pattern I like. Here it is breaking off of the 50. GE Healthcare, I like to see it above the 200. Grab, if you ever go to Southeast Asia, this is the Uber of Southeast Asia. I think they pretty much bought Uber rights there. and you can see grab, nice uptrend, pull back. It looks like it's trying to break out. GRAIL, they make a test to see if you have a hereditary risk of cancer or if you have circulating cancer at a early diagnosis of cancer. I'm a cancer doctor. I haven't taken their test because if it shows evidence that you might have an early cancer, it could be false. And if you have lots of tests, you could have side effects. And I don't believe at this point they've proven that doing the GRAIL test improves patients' survival. Of course, my business partner, who's the pharmacist, he has it every year because he wants to know. I think it becomes a mental decision, but it's something of interest to a lot of people. INOD is another healthcare. I think this is a device maker. Looks like it's in the process of breaking out. Micron is one that I hold. This is part of my good week. Just a big move on Friday, up 5.76%. Someone's got to make all the memory for the data centers. NAMS, NAMS, don't know anything about it except it's got my two dots. It's in a squeeze, good relative strength and OBV breaking out. Pool, breaking out over the 200, volume breakout momentum, good relative strength and OBV. Restoration Hardware, probably put this in the FND and Home Depot bucket. They support new houses, and if houses pick up because rates are down. STKL, Sun Optica, I think they make chips. Consumer defensive is a staple. Is it breaking out of a base or is it still in the chop? I'm going to think it's still in the chop until it clears a little bit higher. SWBI, Smith & Wesson handgun maker, two dots, too low in the pattern, and then Trex, another company that is supports new houses and people that want to do upgrades, breaking out above the 200. None of these are guarantees. What I have found, some of my best trades have been stocks like Micron that present with the two momentums in a row, something I could scan for intraday. So I'm going to end right now for the market review. I still think this week could be hairy. Imagine if CPI and PPI are hot and interest rates, which are really priced in now, and you wonder if 50 basis points isn't working its way into the market. And that could give the Fed ammunition to not cut rates. And I think that would be bad for the market. So just final, my thoughts are, I expect us higher at the end of the year. I still think we got some choppiness for a couple of weeks, and have an awesome, awesome week. And I'll try not to have too much fun in Barcelona that I forget to come home to my family. Trust me, that ain't happening.